Welcome back. Well, as we've been talking about, borrowing money is about to get even more expensive after the Fed raised rates once again today in an effort to curb inflation. But as the economy struggles, there have been some questions about the credibility of the Fed. Young Voices contributor Alexander Salter is up late with me tonight to talk about all this. Alexander, listen, inflation at levels we haven't seen since the 1970s and 80s. So does the Fed risk losing some credibility here?
I think the Fed has already lost some credibility. We have to remember that in August 2020, they switched to what's called an average inflation target. They basically said that they're trying to hit 2% inflation on average over a number of years. Well, now inflation's run way hotter than that. So the question on everybody's mind is the Fed really willing to tighten enough to get inflation so low that we're still going to hit 2% on average? Markets don't believe the Fed, and they have good reason not to believe the Fed. It's just not a credible strategy.
Yeah, in relation to their inflation target of 2%, and we're, towering over 9% right now, it's very jarring for a lot of folks. And, the chair, Jerome Powell, though, he sent some mixed messages today. It's hard to say whether these interest rates hikes are going to be lower in the coming months. How do you see this kind of playing out?
I'm paying a lot of attention to the interest rate hikes, but I'm paying even more attention to what's happening to the Fed's balance sheets, the total amount of assets that it owns, because that matters even more than interest rate policy for determining inflation. And right now, we really haven't seen that much shrinkage in the balance sheet. So I'm still a little bit skeptical that they're committed to fighting inflation to the degree necessary to give ordinary Americans the relief they deserve.
It seems like Powell is saying that they will do whatever it takes to fight inflation, and whether or not that means a recession that comes, I think they're willing to, from what the messaging that they're sending out there, they're willing to keep raising those rates as the coming months are coming. But how do you think this is impacting everyday life for Americans? Because literally Americans are pinched. The consumer spending is down. Consumer confidence is down. What are the areas that you're seeing the biggest impact right now as we are in this flux?
It's really broad-based. We've seen many areas, many sectors that have been afflicted by anemic spending growth precisely because inflation is eating away at people's real purchasing power. Even though wages are growing, inflation is growing faster. The average American household is losing something like $2,700 per year in purchasing power at the current inflation rates. That can't be good for the economy.
So what would you like to see going forward? Is there a solution in your mind as to how we can curtail this?
I would like to see the Federal Reserve make a clear commitment to price stability by switching back from their average inflation target to a good old-fashioned yearly inflation target. Make sure you can signal to markets that inflation is going to be a low and predictable number every year. Not on average over a number of years, nothing squishy and open-ended like that you can always justify ex post as having squared with your policy. Markets need clear guidance from the central bank, and right now they're not getting it.
There are hundreds of companies right now, larger companies, that could be at risk of default if the Fed continues with trying to make borrowing costs higher. Is there concern out there for a lot of these companies?
I think that there are some concerns about that. Really, interest rates in those markets are a global phenomenon, and that means the Fed is a follower, not a leader. Now, on the other hand, central bank policy does matter. I think a lot of economists are more closely watching what's going to happen to the Fed's liquidity and the Fed's financial position as interest rates goes up, because that means that the Federal Reserve is going to have to continue paying banks more and more interest on their reserves held at the Fed. And with those billions of dollars that the Fed has to pay to depositor banks, there's a real risk that the Fed might become illiquid and might need an injection from the Treasury. And that does not look good politically.
What is your biggest concern going forward here as we get into the later months here of 2022?
My biggest concern is that inflation is going to stick around for a little bit. We've seen some promising signs. Commodity prices are coming down. It looks like market inflation expectations are falling. But the longer we have this abnormally high inflation, the highest we've had in this country since 1981, the longer we have this high inflation, the more it's going to hurt consumers, the more it's going to hurt small businesses. Really, we're eating away at the foundation of a strong and prosperous economy. And sooner rather than later, we need to make a recommitment to price stability to fix it.
And is your concern more about inflation or about a potential recession? Although some experts are saying that if we do hit a recession this year or next year, they're predicting that it might be a mild one. Nothing compared to what we saw in 2008.
Right. It'll certainly be a strange one because even if the economy is in recession right now, at least if you're going by the 2 consecutive quarters of negative growth definition, unemployment's not ticking up that much. And that's usually a leading indicator. Unemployment is still down below 4%, and that doesn't look like it's going to budge all that much anytime soon. Famous last words, I hope not. But I'm definitely much more concerned about inflation. You can't make long-term business plans with the purchasing power of the dollar this much in flux. If you want economic growth, you need financial planning. You need a secure foundation to write long-term capital allocation contracts. Only low and stable inflation can deliver that.
And just lastly here, what was the reaction today with this rate hike? What did the market say?
The market largely anticipated it. I think everybody knew it was coming. You saw a big rally in equities towards the end of the day because I think that a lot of people had their expectations about Fed policy confirmed. On the one hand, it's great that markets are recovering a little bit. On the other hand, should the day-to-day performance of financial markets really rest so much on whether the central bank actually hits the policy that it's been hinting at or playing footsie with for several weeks? I'm much more in favor of predictability rather than playing this guessing game.
If you were to identify this moment in time by one word, what would that be?
Unpredictable.
Yeah.
Tumultuous.
Right. And a lot of uncertainty out there. All right, Alexander Seltzer, thank you so much for your perspective, and thanks for staying up late with me tonight.
Thank you.
We will be right back.